Right. Good evening and happy weekend, peoples. I was remiss in getting out Defiance, but because I tracked several of their funds, they had a declaration on their QQQY, basically their NASDAQ 100 weekly payers, their S&P 500, and their Russell 2000 weekly payers. They've been weekly since October the 9th of 2024. Otherwise, you guys know them as, for quite a while. Now, they're getting a little better. I don't like all the nav erosion that I've seen. They're certainly not in Roundhill's class, but they are trying. I do like the fund and thinking that, I like USOI, the oil index. I like their targeted income funds. I mean, clearly with the NAV erosion and the other ones, the targeted do what is advertised, generally speaking. So let's jump in here and I'll go through this for you. So why do I have a couple of places? If you real quick want to see it, look in yellow. Very low payout this week. Now, this is one where this is their fifth payout for the month. So I don't know if that had anything to do with it, what all the issues. I didn't look that deeply in it. Uh, but by waiting a couple days, I basically could report on everything. Because sometimes this happens a few days before. These are your monthly payers. This is your weekly payers. And then I just have this down here so you can real quick in the yellow see the yield on these guys and so forth. And obviously a low payment, right? And you see most of the same data. This just gives me all of the annualizing, gives you guys that. What I started doing, like I'm doing in some of the other funds, is I'm saying, hey, when you paid last time, did it go up or go down, right? Because otherwise I'm tracking every single one. Whereas over here on the right, this is where I'm tracking the various payments, right? So I'm totaling all of those things up for you. And like I said, this particular time, the yield's low on this payment. So I'm still tracking since the fund's inception, which was October the 9th. So I track what was the price then, what's the current price, and then I annualize everything. So you can see here that there's been NAV erosion in these guys, right? There'll be some, here I am saying right all the time, apologize for that, guys. Um, so you do have some nav erosion in the targeted, but that's not so bad. I mean, you're talking about 2% and 3%. The oil fund's going to go through that. It goes up and down with the price of oil. It's a higher yielder in general. Look at the distribution. These guys are targeted to distribute 20%. Well, if you get 20% and you have a 2 or 3% decline, 15, 18, 20% annually, if you did that on your wealth and you had already had substantial wealth, that's unheard of. Warren Buffett doesn't generally get those. Now, people buy in a stock and hold it long term, and it may average 10, 15, 20 years, but these are income oriented index funds, right? And those funds can have big years. The S&P 500 can go up 42% in a year, but very likely, if you go back and you look at 25, 35, 40-year history, you're going to see it somewhere in that 8 to 12% range. Um, so that's why I caution high yield guys thinking they're always saying, well, is this fun? Are you going to keep this? They'll ask Jay at Yomax, are you going to, or even Sylvia here, are you going to stop having this fund? Well, they're never going to stop having a fund as long as the AUM, the assets under management, are there. That's how they make money. When the funds are small, they don't make much money when the funds get very popular. So Yielmax is really going at it, launching all kinds of funds. I got pretty down on their active management on some of their funds. Uh, but I like what they're doing and doing all that. So back to Defiance. In general, if you want a lot more safety and you want to also diversify, maybe own some round hill and you say, let me get in here, go with these targeted guys because in general, they are holding their value. They're not so aggressive, right? So here's one on the S&P 500 over, you know, last month. Now these are monthly, right? I know some of you really like the weeklies, but it gives them an opportunity to do that. All right, so let me see what else is here to show you. Um, Oh, so let's talk. This one was almost late in getting out. They still didn't update the website on this, right? But I did see a couple of sources say a dollar, and that seems to fit. I don't know why. In looking on the website, I didn't see it. Maybe I need to get the alerts. Most of the funds I get the alerts from. So certainly these paid, you look at the yield, I mean, it had an 83% yield. So let's go through USOI here. So launch date 5/10/24. Well, what's it done, right? It came out at 1994. Well, it's 1447, but that's on oil more than anything. Yeah, they're aggressive in creating, distributions, and the more aggressive you are in paying a higher yield, the more likely you expose yourself to the loss side when that aggressive option writing, call writing doesn't really work, even if it's moved to spreads. Okay, so let's summarize on that. So on these three guys, you got your targeted, that's at 1756. Your oil index, there'll be times, right, when oil really takes off. I'm torn between a glut and not having enough with this additional, war rumblings in the air. I mean, this strait over there that Iran ultimately controls, and they're funding the Houthis and all this. So if any of that stuff goes haywire, I mean, oil could go to $200 or $300 almost instantly. You got the issues with the Chinese and the Panama Canal. So if something goes haywire, and this is about the most volatile environment I've seen. So point being, this is still coming out to 16. I don't know why the Nasdaq one has dropped to 12, but it has. And part of it is, I mean, they're both in the 19s. They both distributed 32 cents on their monthlies. The yields are at 20, but this one, I guess it has a little bit more NAV loss, 371 to 224. This one, as you'd expect, well, it has a big NAV loss. When you annualize that NAV loss, it goes from 27.43 to um, 37, right? Because you go with so many days, and yet it still produces. So if this thing starts to take off because oil rises, just giving an example, then you're going to get an outsized, total return. So that's why people who DCA, people who buy in, I mean, I hate to say it, but when you're going to chase high yield, you almost have to try to time somewhat the market. And I don't mean, I mean, if you're a buy and hold for 10 years, then you never want to time the market. You just want to consistently add and buy. But I'm talking about somebody who is like in myself, right? I have a substantial amount of money that I move in and out of high yield. And in that case, based on technical analysis and a lot of my trading paths and things like that, I will attempt to do some of that. I may jump in to a Misty because I think it's down at $20, and the likelihood right now, I'm not in it just at the moment. Again, it could break out for BTC and run to, 128 to 135 here. And then I wouldn't want to be in it because let's say that it goes back to $40 in the Misty fund. Now I know there's a whole bunch of other things involved in MSTR and earnings, and they don't earn a lot, but the whole tax obligation. So there's always dark clouds out there. Um, But just giving you an example, I mean, I hate to say it, but the market has become a trading vehicle as opposed, and that's how these funds produce their incomes is through that volatility. But anybody just thinks that you can buy and hold. So when you see a run about to happen, I'll go into a 2x oftentimes, right? And I'll buy an MSTR X2, right? Times two leverage. You don't want to sit and own that and hold it for multiple years, even if you think that BTC and MSTR are going to be higher in 3 years because there's decay associated with trying to maintain that leverage. Okay, guys, I don't want to beat a dead horse here with some of this repeating stuff. Again, Defiance wouldn't be my first, but I don't throw them out completely. There's some things I like. I think USOI can give you some hedge when this conflict and this environment comes out and says, hey, oil's more valuable than we think. Whereas if we go in a deeper recession, does that drive down the utilization of oil? It probably does. Okay, guys, I'm going to come back and do some metals. I hope you guys metals, if you haven't seen metal prices, gold just at an all-time high. I think silver is positioning itself to run to $50 this 2025. Okay, guys, again, Bruce with Targeted Wealth Creation. I'm not a financial analyst. This is not financial advice. It's for fun and entertainment. See ya. Have a great weekend. Bye for now.